So you're probably familiar with the old song that has a line in there that says, regrets. I've had a few. I think that's a Frank Sinatra or Dean Martin. I think it's Frank Sinatra. Anyway, everybody sort of has heard the song, and most people for the better part of their lives have at some point had some regrets one way or the other. I wasn't a particularly big fan of where I went to college, a fine institution, but kind of wanted to get out of the state of Maine. And at the time, the University of Maine was the affordable option, so that's where I went. I guess probably stayed with a girlfriend or two, maybe too long, in terms of just kind of how life plays it out. But I guess imagine the regret if you retire and you didn't plan accordingly, right? I mean, that's a whole nother ballgame. Think about that, right? About to retire, ready to go, retire, okay? So you oftentimes can't really go back to the old job. And then all of a sudden you start looking at the expenses and you're like, wait a second, I didn't realize that there was that, or I didn't realize that there was this, or there's a lot of things that can get missed. And so this segment of the program, we're going to talk about some of those things that we typically see people overlooking when it comes to retirement, and making sure that you think of everything that you're going to need to cover in terms of expenses. It's this whole notion of retirement income planning, which I don't think gets talked a whole lot about in terms of kind of the financial services industry as a whole. You hear a lot about retirement planning and financial planning and investment planning, but you don't necessarily hear specifically about retirement income planning. And here's why it's so important. First of all, it makes a difference where you get your retirement income from, right? Some places you're going to be able to get it and it's going to be more tax efficient. Well, that's probably pretty good to choose those options. And then you have to also make sure that your retirement income is in fact enough to cover not just kind of the normal expenses, but all of the expenses that you're going to see during the course of retirement. And unfortunately, we see it on a regular basis. Matter of fact, it's probably one of the reasons why we're talking about it on this segment is we saw it just this past week where someone had done exactly what they needed to do to prepare for retirement, or sort of the first step, which is to put together a budget and to really look at, okay, here's what my normal expenses look like. So they had done that step one, but then they hadn't done the second step, which is make sure that those expenses included everything that they needed to make sure that they include. And then the other issue is to just kind of determine where to get that income from so it isn't as tax efficient as possible. So that's really the core of retirement income and what we're going to be talking about in this segment of the program. So welcome into Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. One of Central Florida's longest running radio programs, also a top 25 financial planning podcast. To connect with us, or if you've got questions or comments or a topic that maybe you want to hear us talk about, feel free to reach out to us through our website, nelsonfinancialplanning.com. That's where you can go and share your feedback on the program or any of the programs that you'll see on the various platforms. We've got years and years of programs lurking around out there, so I'm sure you'll find a topic that catch your interest. My name is Joel Garris. I'm a certified financial planner, certified financial fiduciary at Nelson Financial Planning, where we got a team of great folks who stand ready this week to help you change your life with a successful and cost-effective financial plan. So imagine, right, you retire only to realize that you kind of forgot that there were some things that you needed to cover that unfortunately you missed, or unfortunately you overlooked. And for us, it really boils down to sort of three distinct categories that are sort of the most overlooked categories when it comes to planning retirement, specifically retirement income planning. And we're going to give you those three. And then actually in today's world, we're going to toss in a fourth because we think that one is also important as well. So the first is a real understanding of what your healthcare and medical costs are going to be in retirement. And this is the one that I think more and more people are starting to realize this. But look, if you've been working for an employer who's been covering your health insurance, you probably don't have any idea what the real cost of health insurance is, particularly if your employer maybe is covering 50%, or if you're fortunate enough to work at Nelson Financial Planning, we cover 100%. You don't really know what that cost really is if you had to pay for it in full. And that's where the pricing can kind of shock people. It's not uncommon that if you are retiring under the age of 65, to have your monthly health insurance and other costs easily total about $2,000 a month for a married couple. That's a big number, pretty significant. Why do we draw the line at 65? Well, at 65, that's when you can get Medicare eligible. So if both you and your spouse happen to be hitting 65 at the same time, well, then that's great. But if it's not, then one of you is still going to have to pay full freight, so to speak, and the other one will be on Medicare. But understand this, Medicare isn't free. Medicare Part A is, because you've paid into that all along, but Medicare Part B requires you to pay for a monthly Medicare Part B premium. And also, because Medicare Part B doesn't cover everything, then typically you would have a supplement as well. So Medicare Part B is around $150, $175 a month. Supplements typically around $250 or so, $300 per month. So even if you are both 65, that cost is still going to be around $1,000 a month. So make sure you put that in your budget. Next is what we like to refer to as free time expense. And as the name suggests, that's the expense that comes with free time. Because when you have free time, you're doing stuff. You're not going to the office. You're not going to work, and that's committing you to, a certain number of hours to sit in an office. No, you don't have to do that anymore. So you got 40 extra hours in the week to golf or travel or do whatever else. And usually doing stuff costs money. So we kind of encourage people to peg like $1,500 a month for that in terms of covering sort of those things that you're going to be doing with your time, that all of which costs money. So that's number two. Number three, you can't forget the tax man. And unfortunately, a lot of people do, simply because you get used to getting a net paycheck, right? If you're an employee, you're getting a W-2, the employer takes care of the tax withholding, sends it off to the IRS. You don't even really have to worry about it. You fill out your tax return, it's all taken care of. But in retirement, that is not the case. You've got to budget and account for your taxes as well. And so for the typical retired couple, let's say making anywhere from $6,000 to $9,000 per month, which all of that is pretty good, decent retirement, you want to certainly budget around the neighborhood of $1,000 a month for taxes. Sometimes people budget a much, much higher amount, like an overall 20% cut of income. But usually if your adjusted gross income is around $100,000 plus or minus, $1,000 a month probably is going to be sufficient to cover that. So those are the big three that we see time and time again that people miss. Matter of fact, as we said earlier, we had someone come in the office that had missed two of those three. So number one, healthcare costs. Peg $2,000 a month if you're under 65. If both of you are over 65, peg about budget about $1,000 a month. If one of you is over and one of you is under, then split the difference, $1,500. Free time expense, you probably want to go with about $1,500 a month there. Some of that depends upon your lifestyle, how much you like to travel, whether you like to sit at the front of the plane or the back of the plane, all those kinds of things. Income taxes is the third thing. Budget about $1,000 a month if you think your adjusted gross income might be around $100,000 or so, give or take. Here's the fourth one that we're going to throw in there, and this is becoming more of an issue, and that is, of course, inflation, right? So budget about $500 in there for inflation, because that one hasn't been as big of an issue over the past several years, but inflation's here, and it's probably here to stay. So make sure you get all of that in your mix. Most importantly, make sure you're developing a retirement income plan before you retire. That's the kind of stuff that we do every day at Nelson Financial Planning. We'll take a break and return after these messages.